Okay, perfect. Sound is good. We're recording now. Want one of us to record as well? No, it's good. It's good. I'm recording. It just took a little bit of a time for it to buffer and save everything. So we're good. Okay, so let's do this over here now. So we looked at sessions. We looked at currency pairs. I have these notes, so I'm gonna send these notes off to you guys after today's meeting. I'll try my best how to do that, but so far so good. What we're gonna do now is we're gonna go over candles. We're gonna go over candlesticks and just very, very basic stuff. It's not going to be very complicated because, there are also, new people here today. So we got to make sure that everything is covered. Uh, yeah. So we got to make sure that we keep everything in line and everything is basically crystal clear at this point. So now, whenever we're looking at the charts, right? So whenever you're looking at the charts, there are different type of charts you look at. We have what they call our what's this? What they call our line charts. You have our candle charts. There are also Renko charts. I know some wild, wild people or wild, wild traders who really focus on Renko charts. And I don't know how you guys do that. So we're only going to talk about candlestick charts. Now, whenever we're looking at the candlestick charts, we got to identify different type of candles, right? So there are only two candles that we look at. First, you have the bullish candles like this, and then you have the bearish candles, which are colored in what way possible or not, whatever, right? But the bullish candle basically means that price is moving up, which is bullish. Whenever you have a bullish candle, this means price moves up. Whenever you have a bearish candle means that price moves down. Hey, Paul, thank you for joining. I really appreciate your presence. Yes, we see you. Thank you for stopping by. All right. So we got the bullish candles that move up. So now this is going to be the start of the anatomy of a candlestick, right? So this is going to be the anatomy of candles. A bullish candle, it opens at the bottom and it closes at the top because price moves from the bottom and then price moves up. It closes at the top. That's how the bullish candle is formed. Now, while the bullish candle is forming, it can move down and it can also move up, which is why whenever you have a bullish candle, this move down, this is called the liquidity. This is called the liquidity wick. Whenever price moves down, and whenever price moves up right here, it leaves a wick at this point. This is called a wick, which is normally we also say wick fills and stuff like that. So we're gonna go over wick fills and market structure maybe tomorrow or next week. But before we dive into candles and the type of candles we have, let me tell you a story, right? And some of you guys may know this story as well. But this story is from my buddy, and they started trading back in 1994, and he said that back when they were trading in 1994, they didn't have any platforms. There were no candlesticks. I mean, there were candlesticks, but then you had to buy a software to kind of like propagate candles for them. There were no platforms, there were no devices where you could get price action in a second. You actually had to work towards executing trades, right? And this is, he said, what would happen. He said, okay, if you wanted to take a trade, you would literally plot out candlesticks. So let's say the time was 10 a.m., right? You got 10 a.m. and let's say you're trading gold, and gold at 10 a.m., the price of gold at 10 a.m. is 1944. So what they did was they were like, okay, this is where we have 1944, and they would make a line like this. They're like, all right, 1944, we make a time like this. Now, what they were doing is that, okay, we have to wait till 11 a.m., and then they're going to see what price is of gold at 11 a.m. So let's say price of gold at 11 a.m. is 1958. So they're like, okay, well, 1958 would probably be right over here, 1958, right? And this is what they would do. They would do this, and they would do this, and then they would do this. Next, as they're looking at price moving around, they would figure out that, okay, during 10 and 11 a.m., what was the lowest price of gold? And the lowest price of gold was, let's say, 1942, and then they would look at, okay, between 10 and 11 a.m., what was the highest price of gold at that maybe, 1960. Do you get this? This is one candle. So they're like, if you had to day trade, you had to plot out candles over 3 days and then see where you're gonna execute the trade, and then you would have some sort of a candle chart history, because the candle body. So this is the body right here. This is the body, and this is the body, right? So the candle body was between 1944 and 1958. The lowest point, or the lowest price that price had during 10 and 11 a.m. was 1942, and the highest point price had during that time was 1960. Right? So he said, man, like, you guys are so lucky that at this point you guys have MetaTrader, you have CTrader, you have TradingView, you have NinjaTrader, you have fucking like so many things over here that you can put your money at risk within a second. But he's like, back then, the reason why they were more profitable traders back then was because you actually had to wait around for candles to form, to do proper analysis, and then execute a trade. Now what do? You pull up your chart and you got everything laid out for you. Each and everything is laid out for you. There's no problem. You can just you look at the chart and hit buy or hit sell, and that's it. And you can put your money at risk. He's like, man, it was that difficult back then. Right. So keeping this in mind, as we're looking at the bullish candle, this is where we have, a liquidity wick at the bottom, and then you have like a up top wick here at the top, because these wicks basically mean how far the candle moved to the bottom side and how far the candle moved to the top side. And at the same time, if we're looking at the bearish candle is basically the opposite. We open at the top and we close at the bottom. The wick to the top is our liquidity wick. And then this one is our wick, or wick fill. Talk about later on here as well. Is anyone else recording? Yeah, I'm recording right now, right? Which we're going to talk about later here as well. So first thing we're going to talk about is a liquidity wick. Before we talk about a liquidity wick, it's very important to kind of understand or like visualize what a liquidity wick basically means, right? So we have a liquidity wick. A liquidity wick is a move in the opposite direction. Basically, that's all what it is. In the opposite direction before moving in your direction. That's what a liquidity wick is. It's a move in the opposite direction. What I need you to visualize this is in a way that, let's say you have a rocket, right? You have a rocket, or better yet, you have a slingshot. So whenever you have a slingshot, what are you going to do? You're going to pull back on the slingshot, and then you're going to release it. And the more you pull back, the more force there's going to be for price to continue moving forward. Or that pebble, stone, or whatever you're trying to throw is going to have a lot of force to go forward. So the bigger the pullback, which means that, let's say you have a a bearish candle, the bigger the pullback or the bigger the liquidity wick, there's a higher probability that there's going to be higher volume going in your correct direction. That's basically what a liquidity wick is. So if the liquidity wick is big, that means there's a higher probability price is going to move in your desired direction wherever you think price is going to go. So a bullish candle is the accurate depiction of some sort of like a rocket ship trying to launch, because this wick down over here can look like flames for price to continue pushing up, right? So whenever I personally see a candle which is formed like this, I say, okay, you know what? There's a higher probability for price to continue pushing bullish, and this candle is not going to be the trading candle. The candle after this is probably going to look like this for price to continue pushing up. And that's going to be your trading candle. Now, we're not going to talk about which candles to execute a trade on and what candles to look at. No, we're not going to talk about that. We're going to talk about that, maybe tomorrow or next Friday, right? So any issue with liquidity wick, it's a very basic, simple concept. It's just a move in the opposite direction before price goes in your desired direction. No? Yeah? No? Good? Okay, good. All right, very good. Sounds good. Okay, perfect. Shabazz Ghazi speaks for everybody. Perfect. And Paul Blake for everyone. Yeah, man of the people. All right, awesome. So, and another thing I want to point out is that let's say you're looking at exhaustion candles, right? Exhaustion candles are candles which are basically rejections. So one thing that I've been looking at a lot is, let's say you have a candle which, this is a little bit too big over here. Let's say we got a candle that looks like this, right? So this, now if the size of the wick is bigger than the body, then this is where you can say, okay, the size of the wick is bigger than the body. This means there's a high probability we're just rejecting at this point. So I've been trying to use this a lot. So whenever you're going to see a bullish candle, something like this one, bullish candle right here, if its body is bigger and we're already trending bullish and the wick is also bigger, then there's a high probability it's going to continue to push up. But if, let's say, we are pushing up, okay, and then you see a candle that forms like this is where you can say that, okay, this is basically a rejection and there's a higher probability we may start to retrace. This is a rejection right here. But instead of this, if we still have a candle that forms, a big liquidity wick and forms like this means there's still a higher probability we can continue to push up. So this is in that direction where we're already moving. In the same instance, if you have candles that move bearish, and then all of a sudden you have a bullish candle that forms like this, and you're like, okay, the size of this wick is bigger than the body, so this candle in itself is an exhaustion candle. That maybe price moving down is exhausting a little bit, and then you start to look at some sort of a, price to move up and then a continuation down, which we will talk about later, not right now. It's something that we're going to talk about later. So the only thing I want you guys to take from this is basically, the type of candles that we have. We have your bullish candle, and then we have your bearish candle, and that's about it. Your bullish candle, bearish candle, simple. Bullish means price is going to move bullish. Bearish means price is going to move bearish. That means down. Next, we have certain candles which have no wicks on them, right? Which is a whole nother topic in itself, right? Let's say you have a bullish candle that forms like this. What does this mean? It's like, what does this mean? When a candle forms like this, lots of volume, okay. Volume, 50-50 chance price could go either way. Yeah, I would say that price will go either way when you have a candle forming with no wick. There's no wick on the bottom, there's no wick at the top. It does means there was a lot of volume, but what this also means is that maybe if the previous candle was bullish and this new candle, when this new candle started, price couldn't even move down. Like there was so much bullish pressure, there was so much bullish volume that price just straight went up, didn't even attempt to move down. It just moved up and it closed right over here. That's what it means, because it's very important to kind of like, read the candles. It's very important to kind of like understand what the candles are saying, how they're forming. It's extremely important. So, so whenever I see, so I'm going to be very, very simple. Whenever I see a candle that forms with no wick on the top or no wick at the bottom, I just ignore that candle and I wait for the next candle to form. I'm completely going to ignore that candle. So what we're going to talk about is, what if, let's say we talk about an uptrend. Let's say you have an uptrend and you have a candle that closes. Why does it keep making these straight lines? And let's say you have a candle that closes with no wick on the top. Whenever you have a candle that closes with no wick on the top, this means that there's a 50-50 chance that price can either go up or it can go down. So for simplicity's sake, whenever I see a candle that closes with no wick on the top, I just stay away from that. I stay away from that. I'm like, okay, I'm going to wait for the next candle to form. Of course, there are ways to kind of like tackle this. There are some, I feel like advanced cases. There are where you know how to tackle this. So whenever I see candle closing with no wick on the top, there's a 50-50 chance I just stay away. I'm like, hey, you know what? I'm not going to mess around with this. I'm gonna kind of like, stay away, and I'm going to let the next candle form, and then I'm going to see where price can go, because I'm not trying to do anything with this. Now, in the other way, let's say the candle, if a candle forms bullish and it has no wick at the bottom. Example on gold 6 a.m. GMT time frame. Oh, okay, nice. Yeah, we're gonna head over to gold in about 10-15 minutes before NFP. Yeah, before NFP, we're gonna head over to gold. So let's say you're looking at a candle that closes with that basically closes with a wick on the top, and there's no wick on the bottom. This means that the bullish volume was so strong that it didn't even make a lower wick. It just moved up. In this case, there's a very high probability that price can move bullish. That's all what it means. That is, in this example, there's very high probability that price can move bullish whenever you have a candle closing bullish with no wick in the bottom. Now, in the opposite way, let's say that you have a bearish candle and it closes with no wick on the top. You have bearish candle that closes with no wick on the top. This means there's still, a 50-50 probability that price can either move up or it can move down. So the idea is, so whenever it closes with no wick on the top, normally when I first started, I'd look at candles that would close like this one, or I'd look at candles that close like this one. I would look at these and I would automatically assume that there's a lot of volume for price to continue. And I was kind of wrong at that as well, because the longer I assume price would continue moving bearish right here and I would take a sell, what I would see that, okay, let's say the candle did close with no wick on the top and I would take a sell. I would see that normally price would move down, retrace, and then close like this, and I'd still be in a drawdown. Okay, what's this? But in a video you posted on YouTube about 2 years ago. 2 years ago? God damn. You said if a candle closes with no wick on the top, then it definitely go up. I've been following that and it's working. Oh, nice. Okay. So if that's working for you, that's perfectly fine. But 2 years is a long time ago. 2 years is, yes, a long time ago. But if it's working for you, That's perfect. But I now try to stay away. And as I said, there are ways you can tackle that. So that's something we're going to talk about maybe tomorrow or next Friday. Right? So whenever we're closing with no wick at the bottom, I stay away 50-50 chance because what you want to see, you want to have a higher probability to take trade. In the same way, let's say you have a bearish candle that closes, with the wick in the bottom, and there's no wick on the top. This means that the bearish volume was so high that price didn't even attempt to create a top wick and went straight down and created a wick right here. Now, moving up on our notes where we talked about um, uh, like this wait a minute. Yeah, like this wick over here, and we talked about this wick right over here. These wicks, whenever price leaves the wick, that means that there's a higher probability that the next candle is going to fill that wick moving to the downside. So whenever you see a bearish candle forming like this means there's a higher probability that the next candle can continue to push down. And looking at this market structure and the way price moves in that sense, I have made like crazy returns, like hands over fist, crazy returns like clockwork. But it only happens when there's a lot of volume in the market. So reading candles, looking at candles, the way they're closing, the way their wicks are, it's absolutely very, very, very important. And also let me go over this one more thing here as well. So let's say you're looking at a bearish candle and it closes, let's say we have a smaller body closed like this, and you have a wick which is like this. And even if the candle is like this, and trying to we're trying to move down over here. We're trying to move down, and the candle closes like this. This, I'm not gonna look at a potential wick fill. The reason why is because this wick length is bigger than the body, which means it's an exhaustion rate, which means that there's a higher probability that the next candle can maybe close bullish, and we may have some sort of a retracement. So no liquidity wick means volume is okay. Yes, that is correct. So no liquidity wick means that there is enough volume for price to continue pushing in your intended direction. Thank you. Thank you, Blake. So the same thing happens with the bullish candle right here. If you're looking at this area, there's no liquidity wick, and we only have a potential wick fill. This means there's a high probability that the next candle can continue to push up. So we're good? We're good so far? Okay. Candlesticks? Yep. Okay, good. Candlesticks covered, right? Of course, there's also a lot more advanced things to candlesticks that we're gonna look at later on. But let's move on towards doing some analysis on NFP. And let's try to see where price can go with NFP. All right, let's do that. Wow, a lot of notes we've made over here. Yeah, tomorrow's going to be a lot more note-taking day. Casino time, favorite time. Welcome to the casino. All right, what do I have to do? I have to make sure I don't turn off the wrong switches. Okay, so I'm feeling lucky. All right, here we go. Here we go. First time crypto withdrawal took more than 6 hours on Dominion Markets for me. Oh, yeah. It's Friday. Probably our staff is also trying to trade the NFT. So we can't blame them. So let's do analysis right over here. So this is gold. Let's bring up my templates, which is going to be Raja Banks right here. And all right. So I'm also going to open the mic here. Yeah, let me open the mic. So, we could have some
Don't see anything, bro. Just your screen, the whiteboard that you were sharing.
Yeah, you got to change your screen, man. There's a little setting on the top that allows you to set the second screen.
Oh, basically, if you guys go to screen share 2, you'll see a screen. So basically, there are 2 Rakils in there.
2 for the price of 1.
Yeah. Good to go.
Raja, we can't hear you.
राजा जी आवाज को नहीं आपने
Okay. Okay, yo, listen.
Screen we're looking at.
Listen, Shabazz. Shabazz, you have to stop. You have to stop sharing.
Oh,
Yeah. Yeah, just hit stop share. Stop share. Okay, it's loading. There we go. Okay, should be good now.
All right.
All right, perfect. Perfect. Let's go towards properties. Let's go towards scale fix. Now we have news coming up, NFP. Let's take a look over here. Forex Factory. All right, I'm just going to mute everyone because some people still have their mics open. Okay. Oh, wow. Okay. So the previous was 209, and now they're looking at a new one at 205K over here. So, this should be the same employment rate, 5.5, 5.4. This may
no, that's
be,
Canadian.
yeah, this one right here, 3.6, 3.6. It may be the same. Maybe the same. Let's take a look on the 1 hour time frame, 30-minute time frame. Let's do this. Oh, what's happening? All right, here we go. So we have a support being formed. Let's properties, make it a little bit darker. There we go. And looking at 30-minute time frame. Yeah, I don't know. It's just a very, very strong consolidation. All right, I'm just going to mute everyone. No more open mic.
All right.
Okay, perfect. Yeah, and also at the same time, we got a rejection right here. So whenever price is moving down, as you can see right here, so whenever price is moving bearish, you always have to look to the left-hand side, and you got to see that, okay, it was price at that level here before. So before, price was at this level, 1930, and we rejected this level, and we moved up around 74 pips. And as we're moving into NFP right now, so for people who don't know, NFP is the main indicator of the US economy. NFP basically dictates that how many people are employed at this point. And yeah, like it's massive, like it's a massive number. My first NFP, I remember I had a $1,200 account, and I started hammering one lots on Euro USD as it was moving, and I made $1,000 on that NFP. I was doing buys and sells and buys and sells because I didn't know what I was doing. I was just, okay, price going up, buy. Oh, price going down, sell. That's why I scalped $1,000. And then next month, new NFP came. My account was at 4,500. Yeah, I lost everything. because I thought I could make more. So yeah. Okay. So we have about 7 minutes left over here now. 7 minutes left. Seems like exhaustion wick, yes. But this candle hasn't closed yet. Another thing I want to do is I want to bring up the spread. Yeah, this is the spread right here. So see now, this wick is 16 pips. And oh, we're moving up now. See, I don't know what's gonna happen. My only plan is gonna be to use probably 50 lots over here. And I'm probably gonna have yeah, at this time, yeah, you're right. No market structure is gonna work. Probably 25 lots. A sell stop is gonna go below this wick. And a buy stop is gonna go above this wick wherever it starts to make a like a wick to the top side. Yeah, I think it's going to be interesting to see what happens. The gulag is going to be missing me. All right, we got 5 minutes left. See what pound yen is up to. Oh, look at the spread. The spread is also decent, not bad. 1.7, 1 tip, 1.4. Pound yen is consolidating here as well. It's going to be interesting how this moves. If this wick closes as exhaustion wick, would it be right to expect reversal or just retracement? If this wick closes an exhaustion wick, it doesn't matter because we have a rejection, we have a resistance at 1934. If this wick closed an exhaustion wick, let's say above 1934, then we could say price can move up, But in this case, I don't think it's gonna be worth it. So yeah, we got 4 minutes left. NFP coming in strong. I almost when we were deciding the times and stuff like that, I almost forgot that. Well, I didn't take into account that there would be NFP here on Friday. For some reason, I thought that this Friday was a holiday. And we're like, okay, yeah, let's do a Friday, the 4th and the 5th August, and then the week after that. So who else is trying to gamble here today? Let's see this right here. Oh, nice. Harmanjeet is trying to gamble. Ray, I know Ray is trying to gamble over there. Robert is over there. Perfect. All right. Not me. Buy stop only. Oh, wow. Buy stop only. The buy stop gang. It's going to be interesting. My camera battery is also about to die. I'm looking at a new camera too, the Sony A4 or the Sony A3. Man, I didn't know these cameras were that expensive. It's like $4,000. I'm kind of lost. Can you give a small voiceover what you were expecting? So I'm not expecting anything with this NFP. I'm expecting to win, basically, but I don't know where price is gonna go. But the expectation is to make some money. That's what I'm trying to do. Trading NFP gives me sweaty palms. The palms are sweaty, knees weak. The lots are heavy. There's drawdown on charts already. So yeah, we got 2 minutes left over here. And as we move towards NFP, you can see the spreads are also going up over here now. The spreads are going up. Looking at the 15-minute, oh wow, we're still consolidating. I want to have a buy stop above this candle, but you know the thing is, I can't have a buy stop above this candle because as this candle is moving, the spread can activate the buy stop. So I don't want to do that. It's going to be very risky. But what I am going to do is maybe have a buy stop above this resistance, right? Yeah, above the orange line. Above the orange line, I'm going to have a buy stop. Sell stop is going to be low. Like, what if this? If Metacoats finds out that at the Dominion Markets office we're gambling on NFP, Metacoats is going to say, "What the hell are you guys doing?" But yeah, I mean, there's going to be slippage anyway. You're right. Um, so yeah, let's see. I mean, if we push down, there's going to be a massive slippage to the downside. If price pauses just at the time of NFP, massive slippage is going to be expected if price pauses, right? And the numbers are going to be wild if price pauses. All right, let's bring this down over here. Okay, are you ready? Okay. Oh, there's no pause. There's pause. Big move coming. Oh, wow. Look at that. Oh, damn. Oh, oh, what the f Ouch. Did not expect that to happen. Oh my God, look at that. What was this? Oof. Oh, where's the thing? Why can't I click anything? Oh yeah, right there. Wow, 26,000. So this got activated, moved up. No, sell stop got activated, and then the buy stop got activated. So the numbers are, oh shit. So the unemployment rate was good, but the NFP was bad. So no wonder we had a, man. Yeah, you know, when things like these, yeah, it wasn't much to be honest. What was it? 4.3%. Not bad. 4.3%. But now the thing is, see, now the news came out, NFP was bad and unemployment was good. What's going to take precedence? What's going to take the full power? I think unemployment is going to take full power over NFP because NFP is just a news release. If NFP is just a news release, this means there's a high probability for price to take into account the numbers that were out for unemployment because unemployment numbers are what's gonna stick with the market. That's what I've seen. So maybe this is just a tap at this resistance to possibly continue pushing down, right? Probably close 11 pips on a forward lot. Oh, congratulations, Paul. Congratulations. You want to share some of that with me? It's gonna it's gonna help me look. Yeah, yeah, I think so. Because if that's the last tap, then maybe yeah, right here. right here should still be good. Just above these wicks. Just above these wicks. Because if NFP is just a number and unemployment is the main number that's going to stick with the market and the market's going to take some time to like kind of absorb the unemployment numbers, then overall we should move bearish with gold. I did not get my. Oh, okay. Message me in Slack and then we'll take a look at that. Sorry for interruption. Can Caesar join? Yeah, he is here. All right, I'm gonna take this win right here. The small win, kind of like, put a little band-aid on the pain over there. But yeah, that makes sense because if this is the last tap, then we should continue to push down. Yeah. Should have gone 50 lots on that sell, to be honest, to make everything back. Is Caesar here? No? Caesar should be here. Doesn't have the link. Oh. I'll help him. My finger's still shaking, Forla. Maybe pump them up to 5 lots. Pump them to 5 lots, and then that's it. Nothing's gonna happen at 5 because 5 is a nice even number. Because after 5, there's 10. Where's Tovart? There you go. Yeah. So just be honest. Who got blasted with the sell stops and the buy stops? Who got blasted? Me. Oh, okay. 100%. Wasn't my day. Blasted over here. Damn, yeah, exactly. And then who made some back with the sell from the top? Mine didn't get because I over risked. Yeah. See, here's the thing with news, like with news, sometimes you're gonna get a huge slippage, but you're gonna go in profits. Sometimes you're gonna get slippage, like what happened over here. Like, look, I got slipped, man, fuck. I got slipped 63 pips, and then price went all the way back up, activated the buy stop, and then came down. Yeah, I was just like, wow, is this really happening? And this happened in like 5 seconds. And someone secured 10 pips. Very nice. Good job. I had a feeling of this. That's why I was not in. Yeah. You know what? I kind of like now when we look back at this, we look at, the NFP numbers, what they were expecting. So if we look at ADP, right? Let's take a look at ADP over here. Look at ADP. There was a massive change, right? So from 455, they were aiming for 191. And when this came out, gold just dropped after that. Gold ranged a little bit for 15, 20 minutes, and then gold continued to dive down. Now, when we look at NFP was a whole completely different story because they changed the numbers over here. Wasn't this like 204? This was 204, right? This was 204. I 100% guarantee you. This was 204. They changed it to 185. Yeah. I do think gold's going to continue pushing down, I would say gold's going to continue pushing down. This is just like, as long as we stay below 1939, I think we're going to continue to push down. But if we go above 1939, then forget what I said. Oh, it was 207K. Yeah, 207K. Wow. So the big lesson learned from here is to don't trade news. That's tough. Super tough. Now you just gotta wait. Wait for this candle to close, the 15-minute candle. Wait for the 15-minute candle to close, and then that's it. Caesar probably doesn't have a shirt on. I think that's the only thing he doesn't have on. I hope. Guy moves around a lot. Oh, there he is. Yeah. Yeah. See this right here? I think I think this is just a liquidity grab on the top side for price to continue pushing down. I would want to say this is just a liquidity grab for price to continue pushing down. Where is that? Yeah, I said this is just a liquidity grab. So as long as we don't break above that area, I think we should continue pushing down. As long as we don't move above 1939. We got 5 minutes left over here. Hey. So what we're gonna do is in about around like 8:30 a.m. Eastern, 8:30 a.m. Eastern, we're gonna start like a live question and answer. I think that's what we're gonna do. And then yeah, then we're gonna call it a day and then we're gonna come back tomorrow. It's already 8:40 Eastern. Oh no, 9:30. 9:30 a.m. Eastern. I'm sorry. Miscalculated that. 9:30 a.m. Eastern. Yeah, I don't think it's gonna, but let's take a look at pound yen. See what pound yen did. Nothing. Just ranging over there. Pound yen has some sort of market structure here as well. Because if you do break below this area, 181, you got like almost like 38 to 40 pips at this point. On MT5 desktop, my Dominion Markets trading account credentials don't log in. Yeah, I don't know. Maybe uninstall and then reinstall. And yeah, it should work after that. Maybe uninstall and reinstall. Gold to the moon? Yeah, seemed like it. That's it. We have clean range to left hand side. I think we're gonna correct this whole move we had yesterday from ADP. I guess broke above 1939. So yeah, it just like kind of makes sense at that point now. What an NSP is. Wow. 26K. Down to 21K now. Can I make this stack? That's the thing. Can I make this stack over here? Scalping away. Would that be a good idea? I don't think that's gonna be a good idea. That's gonna be the worst idea because we got the whole next week. Let's see over here. Let's see on Sunday, Monday, we got Monday, the CAD holiday, we got Tuesday, we got nothing going on, clean. So whenever we have, like a clean day, this means there's going to be very clean price action because there's no news, there's nothing happening. So I think it's going to be clean price action even Wednesday. Thursday, we got CPI, which will again be, very high volume. And then Friday, we also got nothing going on. Core PPI is like whatever. Yeah. It's like whatever. So, that's fine. Let's take a look at this over here. Mm. Oh, also for people who are new over here, who just joined and who didn't read the announcement, that if you are watching this and if you're a client at Dominion Markets, we're giving you $5 per one lot in commission. Raja, your audio is inconsistent. It goes up and down. Oh, really? No, I don't think so. I think it's got a lot to do with maybe the way how I speak. You know, sometimes I go really up and sometimes I go really low. Like right now it's going to be really low, but then when I get excited, yeah. So what was the announcement? The announcement I'm going to write down here in the chat. Everyone who joined will be able to trade Dominion Markets with $5 per lot instead of 7. So that's a huge discount. Would it be applied automatically or we have to opt in? You have to opt in. You have to email support. We're going to let support know. We're going to cross-reference the emails and then, yeah, that's it. Yeah, that's it. Yeah, it's cool. It's all cool. Still consolidating here in Hong Kong. Still consolidation. Yeah, I'm excited to see what this see these 5-minute candles. This is now imagine this is the 30-minute candles, or imagine this is imagine this is the 15-minute candles or the 30-minute candles, right? This is something that we were talking about, that not all the candles will continue to move up. Now, if you look at this candle right here, this 5-minute is a 35 pip candle. The next one, body is like 21 pips, but the entire candle is like 40 pips. The next one is also like 50, 60 pips at this point. So for price to continue pushing, it's very, very unlikely, unless it does some sort of a pullback. It does a pullback, like comes down, creates support, and then continue to push up. That's going to make much more sense. But the way it's moving at this point, I think it's going to be important to kind of like, wait to see how, yeah, especially looking at the 15-minute, it's going to be a good idea to kind of like wait to see, like, how price moves after that. Because if this was ADP right here, even ADP consolidated for a little bit, and then later on, we continued to push down. But this also doesn't mean that you can take a sell. Ooh, Robert is repping the Dominion Markets hat. Man, I lost mine. Now I have to get a new one. Yeah. I lost mine. All right. So I guess after the 15-minute candle is gonna close, we're gonna start our zones and sessions. Zones, support resistance zones. Yeah, that was the most basic way I traded in the beginning. Oh, wow, look at that. All right, I'm gonna open up the mics here again, and let's see.
Hello, Raja.
राजा जी आवाज नहीं आ रही
Okay, yeah, I heard Paul and then I had someone else. Perfect. Should be good. Yeah, there's no pullback now. No pullback. Normally we would want a pullback and then price to move up. Maybe if we do continue pushing up, and then there's some sort of like exhaustion candle up over there, maybe that would allow price to maybe push down or push back down. Maybe.
राजा जी 500 पॉइंट का नुकसान हो गया
Oh.
Raja, looking at the 4 hour, looks like we could go to 1950.
Yeah, looks like right up over here. But then there's this rejection here, which I'm worried about.
Roger, if the 15-minute breaks the high, do we think it would keep pushing up?
All right, I was on the call with the market maker, and they were saying just put a zone at around 1942, 1943, this rejection to the left-hand side. Now, normally when we see rejections over here to a left-hand side, and then, and then there's a candle that kind of like, broke below this area to continue pushing down. Maybe this is an area where we will reject, create some support, and continue blasting off. Maybe. Just maybe. But pound yen is still ranging. Still consolidating on pound yen. I wonder what these guys are doing over here. Oh, I've been watching a lot of I've been watching a lot of live poker here lately too.
So
Same
that's
here.
all-
Quite entertaining, the poker thing.
Oh, he's looking at sells from here as well for price to move down. Okay.
So Raja, that's always been one of my biggest questions is when we had a clean move going down, and how far do you look over on the left-hand side for the rejection to be valid?
See, I'd look at the most recent rejection to the left, right? So in this example, if you look to the left-hand side, there's a clean candle that went down, right? But if we looked further more left, there was a rejection right here. Now, I also say that, okay, if you have a rejection and that rejection was not respected by a recent move, then the next candle is going to continue reflecting the recent move, but you also have to keep in mind the rejection here as well, right? Which means that if there was a rejection, then there's a possibility we may reject from this area. Now, just on this example, if a candle is moving up and let's say the candle closes right at 1941, then we can't expect the next candle to continue pushing up. And the reason why is because this candle has already moved, 93 pips. So unless there's a huge change happening in the economy or some big news comes up, that's the only reason why the next candle is going to continue to push up. If that does not happen, then there's a very high probability price may look at this rejection to the left as an opportunity to reject, to come down, create support, or to grab that liquidity to continue pushing up.
Does
So
the gap have anything in this?
No, the gap has nothing to do with this. It's just like we're just looking at the most recent rejection. So if we're approaching this area, to the left we had a clean candle, and then to the left again we had a bounce off of this area right before market closed. We made support right before the market closed. So that zone is a very iffy zone, whether price is going to reject it or it's going to continue to plow through it. That's something that we're just waiting to see how the candle closes.
Thanks for the clarity.
Yes, sir. No problem.
So basically it tapped right there. So basically it tapped right there. So we have to wait to see if it passes that zone and continue going up.
Yeah, exactly.
Gold
Exactly.
Gold's very disciplined for that.
Yes, like it respects zones a lot. Like if this candle closes above 1943, I still wouldn't count on the next candle to continue to push up because the news wasn't wild. The news was like kind of like detained news. Like the numbers were pretty much, not that crazy to begin with. If the numbers were crazy, then you'd expect price to just continue moving.
Keep flying, yeah.
Yeah.
So a good pullback would confirm that if it were to keep going up.
Yeah, exactly. Exactly. You're absolutely right. Kind of like what this guy had drawn his candles here a minute ago.
Yeah. Yeah, which we see is falling back now, so not enough volume.
Yeah, this may mean a good sell with a stop above 1943. Just kidding. But still, like if it comes back to like 1941.50, 1941.60, I wouldn't mind taking a sell with a stop above 1943. Like
Gotcha.
lose 15 pips to make like, 40, 50 pips as it retraces.
Gotcha. Yeah.
Those are pretty good odds. Because getting a sell above at like 1941.50, 1941.60 is like having pocket aces and you're just waiting for like, the cards there and you're like, all right, let's see.
Back down to like 1937.
Yeah, exactly. But having a sell right here, it's like having a jack and a 5.
Yeah.
You're like, yeah, can't do much with that.
Nah.
So the new hour is going to start. If this new hour starts to push till like 1941.50, 60, that's an amazing opportunity for a sell for price to move down. Just depends on how we close here now.
So I missed the first hour and a half. I didn't get the link. Will we be able to watch the recording this weekend, or we got to wait, or we have to wait till it's finished?
Yeah, so you will be able to watch the recording this weekend.
Cool.
Yeah. Yes, sir. All right, here are my pocket aces
Mhm.
right above this weight. I wouldn't consider this a pocket ace. I'd consider this like a jack and a 10. For people who play poker, they know what I'm talking about. It's like having a jack and a 10. You're like, all right, let's wait for the flop. Let's take a look at pound yen over here. Nothing. Still. Also, please share the notes along the recording. Yes, sir. Yes, I will. Yeah, so this is like a whole lot of way down. Okay. We got about a minute left. Let's see here. So the class is over for today? No, class is not over for today. What do you mean? Okay. So I'm just gonna let this run and let's move on over. All this pineapple is giving me a sore throat now. A lot of pineapple I had today. You know, in the UK, when they first discovered pineapples were really expensive. Only the rich and the famous had access to pineapples because they had to bring it over from the Caribbean or wherever they were, but they had to really import them, and it took days on ships for pineapples to get to them. Yeah, when I found out, I'm like, oh wow, that's crazy. So yeah, it was an exotic fruit. Some, general.
Hey, Roger, did you take the sell there
What?
before you close that? Did you take the sell?
Did I take the sell?
Yeah.
Yeah,
I
yeah.
thought- yeah, you took a sell.
Yeah. It's still running. Why did you take a sell?
No, I was waiting for it to break the previous 15-minute low.
Oh, okay. Yeah, I'm just gonna let it run. Like if I do lose this, I'm gonna be down like maybe like 6%. It's no big deal. Okay. Let's take a look at some zones and ranges here. Right. So, all right. Let's do this. All right, perfect. We have zones and ranges. Okay. So whenever we talk about zones and ranges, it's very important to identify that what range are you going to be able to look at to execute a trade? Sometimes, guys say, okay, like, what, my range should be around like, 20 pips and 15 pips and this and that. So I'm like, even if you're looking at a 15 pip range, or even if you're looking at like a 20 pip range, you need to understand that there's going to be some sort of a spread there as well. So, for example, let's say that you have a support down over here and you have a resistance up over here, and this range is about a 20 pip range. So if you're looking at like a 20 pip range and you're trading a pair, let's say GBP JPY, what you need to see is you're like, okay, if I got a 20 pip range and you have a candle that's at support and you're trying to take a buy and anticipating price to continue pushing up, if this is a 20 pip range, this candle is probably 7 to 10 pips, right? Even okay, 10 pips is a little bit too big. Let's say this candle is like 7 pips big candle. 7 pip big candle right over here. So now what you're left with is like 13 to 15 pips, I would say. 13 to 15 pips minus spread. Your spread is going to be like, let's say 1.5 pips, so you're left with like 12 to 13.5 pips. So that's the real range you have left right over here, right? Like 12 to 13.5 pip range. So this is not realistically a good range to trade because you don't have enough move. Because whenever you're trying to plot out ranges, you're trying to see that, okay, how far can price move in that instance? Because you need to have a good higher probability of winning. So when we were talking about candles that close with no wicks on the bottom, a bullish candle that closes with no wick on the bottom and a bullish candle that closes with no wick on the top, this candle has a 50-50 chance of winning. But when you look at this candle, a bullish candle that closes with no wick on the bottom, this candle has, let's say, I would say like a 70% chance of winning versus 30% chance of losing. So that's something that you're looking at all the time. Now, in the same way, oh, I just got stopped out. But in the same way, if you're looking at the ranges, you need a range that's going to be enough for you to say, okay, you know what? Now I can probably have a profitable trade. So instead of having like, let's say a 20 pip range, I would say maybe look at something that is maybe, like a 40 pip range or like a 30 to a 40 pip range. This is going to be a much better scenario for you to actually have like a profitable trade, because even if you have like a 30 to 40 pip range, because like, sometimes guys say, oh, is like, what's the better range? Is a 25 pip better range or is a 30 pip better range? I would say anything between 25 and above is going to be a great range to take a trade. A great range. So what's the range? Let's define a range. A range is the distance between support and resistance. That's what the range is. The range is the different distance between support and resistance. So if this is your support, up over here is going to be your resistance. So you got a 30 to 40 pip range. And even if you have a candle that's closing at support, and let's say like, previously price was coming down, you had a bearish candle, price was coming down, and then the next candle also came down, and now you have a support form, and this support is formed in an uptrend because like, price went up like this, we retraced, create support, you have a support form, and like looking to the left-hand side, your resistance is somewhere right over here, and you got a 30 to 40 pip range. Now you know that there's a high probability for the next candle to continue pushing up and give you that extra, like a 20 pip gain or give you that extra like 25 or 15 to 20 pip gain. That's going to be much more easier at that point. So, and also at the same time, if you're looking at ranges and if you're not executing at support, it's always better to ignore certain ways price forms, right? And what I mean by that is that let's say if you had price coming up, right? Price came up and then we kind of like, retrace right here, just like gold needed to retrace, but it didn't. Retrace right here, and then you have a bullish candle forming, and then you have another bullish candle forming, and then let's say you have another bullish candle forming now, and this is a, let's say like a 30 to a 40 pip range. Taking a buy in the middle of a range is probably going to be the top ways to lose money, taking a buy in the middle of a range. So make a note of this. Whenever you have a candle that's in the middle of a range, that's going to be the best way to lose your trade. Because here's the thing, whenever price is in the middle of a range, there's a 50-50 chance it can either go down or it can go up, because it's in the middle of a range, you know. And if this range is, let's say, like a 30-minute range, or even if this is, let's say, like a 1 hour range, and if we're in the middle of a range, there's a 50-50 chance the price will either go up or it can go down. But if you have a scenario where price is at support on a 30-minute range to, like, you know, like a 1 hour range, then there's a higher probability that price is going to go up. And this goes back to the fact that when we started trading in the beginning, we were trading on the, like, you know, the 4 hour time frames, and we would take like, you know, buys on the 4 hour support, or we take sells on a 4 hour resistance. There was a very high probability that price played in our favor for, like, you know, 15-20 pips. If not all the time, most of the time it did run into, you know, that pip area. So if this was like a 4 hour area, and if we create a support, there was a high probability we moved up. But whenever a trade was taken when price was in the middle of a range, then there was a higher probability we always lost the trade, because price would either go up or go down. You know, because all the time you have, so whenever you're executing a trade, you have to make sure that the winning probability is in your favor. If the winning probability is not in your favor, then it's going to be, then it's going to be very difficult for you to actually get a winning trade and actually get confident at the same time. Right? So this is your range. This is your range right here. You always have to measure your range. Measuring range is going to save you a lot of headache, because let's say, for example, that this range, instead of like, you know, 30 pips, it's 20 pips, right? If it's a 20 pip range, now automatically you're going to say, oh, okay, Raja, you know what? This is a 20 pip range, so I'm not going to mess around with this range. I'm just going to wait for price to either break out of this range to the downside and then try to see if I can take a sell, or I'm going to wait for price to break up out of this range and try to see if I can take a buy for price to continue pushing up. You know, it's that simple. So my rule is that if I have a range which is less than 20 pips, I'm staying away from that range. I'm not gonna mess around with that range. I'm not gonna try to execute in that range. But if a range is like between 25 to 30 or 25 to 40 pips, then I'm gonna try to execute in that range. Can I ask a question? Yes, sir. For sure. All right, let's see this question. Why the 30-minute or the 1 hour time frame? Excellent question. This has to be a very good question. And the reason why the 30-minute or the 1 hour is because these are strong confirmation time frames. Oh, one thing we forgot to discuss over here. Time frame, where was that? Time frame. Yeah, this one right here. The one thing we forgot to discuss this over here, that which time frames take precedence over the other time frames. So let's say we're looking at like, you know, let's do this right here. Time frames extended, right? So let's say we're looking at the 30-minute time frame. 30-minute is a very strong confirmation time frames. 1 hour are very strong confirmation time frames. 4 hour, and so on and so forth. If you're looking at the 15-minute time frame, 15-minute are low, what's the word? Are low confirmation low confirmation time frame. So 15-minute ranges are also going to be small ranges. So I ignore the 15-minute ranges. I only look at the 30-minute ranges and the 1 hour time frame ranges, because here's the thing. The time frames smaller than the 30-minute are like your siblings, you know, when you're like 10, 11 years old. When you're 10, 11 years old, right? And if you want to go somewhere, or if you want to go to a friend's house, or if you want to go play outside, you're going to go ask your father. You're going to ask your father, because your father is probably like a 1 hour time frame confirmation. And what's he going to say? He's going to go ask your mother, because your mother is going to be a 4 hour confirmation time frame. If she says yes, you're like, okay, I don't care what anyone else says. I'm going to go play outside. You know, but if you ask your elder sibling, which is a 15-minute confirmation time frame, can I go play outside? Yeah, that confirmation is there, but do you think it's going to be valid? It's definitely not going to be valid, because if the 4 hour, or your mom finds out, she's going to say, who told you to go play outside? The 15-minute time frame? No, that's a low confirmation time frame. You got to listen to me. The higher confirmation time frame, the 4 hour, the 1 hour, the 30-minute, right? So these stronger confirmation time frames, they will help out a lot. And tomorrow, what we're going to talk about, these confirmation time frames, and also we're going to talk about the market structure that kind of like, you know, puts these things together, so that you know that, okay, whether you should be looking at the 15-minute market structure confirmation, or should you be looking at the 30-minute market confirmation, like, you know, structure. Is there a way to anticipate the probability if candle will break through the support or bounce back? No, there's no way. You have to wait for the candle to close. Just like the candle on gold right now, you know, you just have to wait for it to close. Sometimes we miss the eatery while waiting for the 30-minute. Yeah, exactly. That happens, you know, and that's a lesson that you're going to learn over time. And the lesson that you're going to learn over time is that it's better to have pain of regret than to have pain of a loss. It's very, very important. You know, like when you miss a trade, you regret taking the trade. Or when you miss a trade, you're like, okay, you know what? I was waiting for the 30-minute confirmation, or I was waiting for the 1 hour confirmation, but price went up and I've missed the trade. That pain of regret is way smaller than the pain you feel when you take a loss because you didn't wait. It's very important. Should I listen to my mom more? Yes, absolutely. You should listen to your mom more. Absolutely. It's very important. It's very important. Okay, so the things that we had to talk about today was very, very basics, right? Talked about sessions, we talked about currency pairs. Basically, we built a overall, like, you know, a trading plan. We talked about pairs, we talked about, like, you know, your session times, we talked about what currency pairs to look at during that time, like, you know, pre-Asian, Asian Open, pre-London, London Open, pre-New York, New York Open. Talked about currencies, talked about time frames. The most important thing we talked about today was time frames, that which time frame correlates with which session, right? The 4 hour candles, how they correlate with different sessions, and how, like, you know, there's always going to be one 1 hour candle that's going to build the overall 4 hour candle. And that's going to be your trading candle. Like if you look at gold now, right? If you look on the 4 hour on gold, you'll see that only one 1 hour candle created the overall 4 hour candle. All the other 4 hour candles were teeny weeny, tiny, beeny, meeny candles, you know. We talked about candlesticks, very basic stuff about candlesticks, bullish candles, bearish candles, talked about, like, you know, candles with no wicks, exhaustion candles, and then what? Zones, ranges. Ranges we talked about. Zones. Zones are basically our support resistance zones. I think it's better that we move into tomorrow for that, because there's going to be a lot more information with that. So what we're going to do now is we're gonna start to take some questions, and then we're gonna answer, as we go. Oh, what happened? I didn't mean to do that. You guys can't see? Can you guys see now? Okay, you guys can see now. Okay. I pulled out the wrong cable. Okay. All right, let's do this. What's this? The highest bearish candle you drew, would that be the resistance form? And would it be okay to trade if a candle closes above that, or is that classified as middle of the range? Oh, okay. Guys, one by one. One by one. So you're talking about maybe this one right here, right? This one right there. Yes, no, because it's in an uptrend. So whenever you have uptrend, something we're going to talk about tomorrow. Yeah, something we're going to talk about tomorrow. So whenever you have uptrends, you're waiting for price to have a pullback, create some sort of a support, and then continue to push up. Yes, sir. When you did back testing, did you find statistically that the 30-minute time frame is better than the 1 hour because price was still evolving, whereas the 1 hour price? Yes. Yes, that's absolutely correct. And tomorrow we will do a back testing session. Tomorrow we will do a back testing session in the last hour and a half. You said that the biggest mistake is to take a trade in the middle of a range, as per your example, but wouldn't that be impulse entries? No, that wouldn't be impulse entries, and we're going to talk about impulse entries as well. That would not be impulse entries. How will you be sharing the recording of the class, email or Slack? That's something we have to decide, but it should be done by Sunday. How are you able to keep your cool when the candle is fluctuating like crazy? For example, NFP trade on gold you took, because I knew how much I'm going to lose. That's how I basically keep my cool, right? Is this going to be the same Zoom link? No, it's not going to be the same Zoom link. It's going to be a different Zoom link, but it's going to be sent in the Slack group. Yeah. So best way to keep your cool is to manage risk. Please, can you bullet point what we've been through? What we've been through? No, you're going to get the recording of this. You're going to get the whole recording of what we did today. I don't know if it's a question or psychological tip. Most of the time I'm profitable 4 out of 5 days, okay. And after one winning trade, I call it a day, okay. But once my first losing trade comes in, I just can't stop. Harmanjeet, that's a psychological thing. What do you do when you go to the gym and you're doing bench presses and then all of a sudden you feel pain in one side? What do? Do you keep going or you stop? I stop. Today I was doing dumbbell presses. I felt the pain. I'm like, oh, Raja Banks, gotta stop now. Gotta listen to the body. I stopped. I did some cardio and then I went home. So you answered your own question. You answered your own question right there, that when you take your first losing trade, you just can't stop. So what do you got to do? You got to stop. That's it. When you take your first loss, just stop. That's end of story. How do we get the simulation software from DM? I went to purchase it this weekend. Yes. So I have a copy of the Software FX. And tomorrow, before we start, I'm going to send the link. I'm going to send the link, or maybe after we're done tomorrow, I'm going to send the link. But regardless, over the weekend, I'm going to send you guys the link. You mentioned you zoom in to see what the current candles are doing. Does that mean you don't zoom out to identify what the trend is to know? No. So what I do is I look to the left-hand side, right? Let's say that I have a chart and the candles are pushing up over here and and pushing up over here, and then we're trying to create some sort of resistance, and we're trying to push up some more. I'm going to look to the left-hand side and I'm going to see where do we have clean candles to the left-hand side. And wherever we're going to have clean candles to the left-hand side, I'm going to know that, okay, that's going to be my target. And I only expect the next candle to continue to that target, right? From here all the way up to here, and then we're done trading on the 30-minute time frame, 1 hour time frame. That's why I don't look at the overall daily or the 4 hour. I don't. I'm going to take my 20-25 pips. I'm going to secure 90%, and I'm going to leave the rest run. If that keeps running towards a daily target or a 4-hour target, so be it. Do we already have our what? Do we already have our bootcamp Slack? What? Do we have? Yeah, I don't know what that means. Can I join the Slack group? Yes. Yes. Yeah. So So we have the Slack group. Some invitations weren't sent because we ran out of invitations. So over the next 5 hours, you all will get your invitations coming in. Basically, we don't have a bias, right? We just wait for support resistance to break and take a buy or sell accordingly. Yes, that's correct. Because let's say you're looking at the 4-hour and the 4-hour is, let's say, bullish, and you're like, okay, so the next 4-hour can continue to move up. Then you're just looking at a support to be formed on the 30-minute and the 1-hour, which is something we're going to go over tomorrow. You said earlier that we should choose a pair that is open only one currency at the session. How do know, for example, GBP is strong, JPY is weak? Can this be done before some big move? Yeah, you don't know, but I try not to overthink about it. Because I know as a person, as an individual, if I overthink, I mess up. So I just said what I believe works for me, and it's something that works for a lot of other people, because I think a lot of other people, they think very simplistically. So if I'm choosing, let's say, GBP, if I'm choosing, let's say, AUD JPY, where was it? So if I'm choosing, let's say, AUD JPY in the Asian session, I don't think it's going to be a wise idea, because then I have to do analysis whether AUD is strong, and I have to do analysis whether, like JPY is strong. So it's going to be difficult for me. I'd rather just choose, GBP JPY, where I only have to analyze, do analysis on JPY and then see where price is going to go. That's all what I get to do. I just have to keep it very, very simple. Slack group invitation, yes, it will be sent. If we do not get volume in our trading time, should we move to the next session or call it a day? Call it a day. Do not move to the next session. We should have MCQs tomorrow. Just call it a day. How do you interpret candles which breaks the high and low of the candle and close in a direction of a previous candle? When a candle breaks the high and low of the previous candle, that's called a volatile candle, and that's something we will go over tomorrow. Looking at gold now, is this an exhaustion wick formed on the 15-minute? Closes at 1940. Yes, that's an exhaustion wick. But as I said, 15-minute are weak confirmations, which is why it didn't go down. Looking in fly to the next country and keep going. Yep. Can you repeat how are we going to get recording of today's lesson on Sunday? How can we use the next person to ask when you're going to get the recording? We're going to move the recording to Monday, and so on and so forth. So you get the idea, right? Then Tuesday, Wednesday, Thursday, Friday. How can we use proper multiple time frame to execute? We'll look at that tomorrow. Gold wasn't mentioned in. Yes, so gold moves. I've seen gold move in all sessions, because in the Asian session, gold moves because of the Australian dollar. In the London session, gold moves as well. New York session, gold moves as well. Only a single 1-hour candle makes up the majority of the 4-hour candle body. What about the weekly candle? Is there certain days? Yeah, certain days, like NFP days. You have weekly. I've never looked at weekly in that sense. So Yeah. You'll probably have to spend a good amount of 6 to 7 months to kind of like see how the daily candles are set up. Because if you're looking at the daily candles or the 4-hour candles, how the 4-hour candles are set up based off of like, the 1-hour candle, 30-minute candle, it may take you. What happened? It may take you a couple days, basically. Can you guys hear me? It's good? Okay, perfect. Based on your experience, should one trade GJ in pre-NY New York Open? Looking to switch to UJ? Yeah, see, when we first started trading, USD JPY, it had a lot of good volume, back when we started trading. But then the volume changed a little bit. Now volume, I mean like the size of the moves. Now pound yen has really big moves, really good moves, to be honest. So we've basically stuck to we've stuck to pound yen. So pound yen still has some volume during that time, but if you think that you want to go towards USD JPY, sure, go ahead. Maybe you may find something better. Do you think gold or GJ is more beginner friendly, easier to trade? I can't see you. Yes, because the battery died. I can't see myself either. I have no mirrors. Yeah, do you think gold or GJ? I'd say I would say any pair is friendly if you spend enough time on it. That's what I will say. Every pair is a friendly pair if enough time is spent on that pair. You're going to have a lot of success with that. But I think a lot of people, they focus on trying to get a trade in as quickly as possible when they start. So it becomes very difficult. If support is formed with the bullish candle, would you draw support at the bullish candle body or the candle wick? We'll talk about that tomorrow. Hey, William, is this the William from Australia? Just so I know. Oh, okay. Okay, I get it. All right, William from Australia. Yeah. Yes, we're gonna go over that tomorrow. Do you think London session is easier? No, any session that you can spend time on, it's something we talked about here too. Like, let's say you're looking at you're looking at London Open only. If you spend enough time on London Open is gonna get very, very easy for you. If you're spending time on pre-New York, then pre-New York is gonna get very, very easy for you. But it just depends on how much time have you spent. It's just like when you go to the gym in the morning, you go to the gym in the morning for about 6 months, you get used to it. But when you go to the gym in the evening time after 6 months, you're going to be like, man, like my body is not used to lifting heavy weights in the evening time. Like now when I go to the gym in the morning, my body can lift weights in the first thing in the morning, no problem. But if I go in the evening time, my body is just not used to that. The same way goes with price action here as well. Like if you're more used to trading, let's say like New York session, and if you switch over to London session, it's going to take you some time to get used to the movement of London session. In the beginning, you're going to be like, man, what the fuck is this? Like prices just move some in weird ways in London session. I don't understand this because you haven't spent enough time watching London session because you don't have New York Open in London session. You don't have NFP in London session. You don't have CPI in London session. You don't have New York Stock Exchange Open in London session. You have London Open and pre-London Open at London session. So there's completely different market dynamics. So if you're trading New York session and let's say the opposite, right? Let's say you're trading London session and now you want to move on to New York session. You can't just move to New York session. You have to watch the session for about, let's say like 2 months and 3 months to kind of get used to the movement and then be confident enough to actually execute a trade. When does the more advanced context start for people that did go over EMMA, MF, and SRC? Probably tomorrow and next Friday. Understanding candles were easy while you were drawing the diagrams, but an actual MetaTrader graph is kind of confusing. Is it normal? Yeah, it's normal. It's just you got to spend some time and you actually have to wait. So tomorrow when we do simulations, you're going to see that the same candle patterns that we're going to discuss are going to show up as well. Since you are at the office, could you take care of my withdrawal? Hey, there are withdrawals missing. Yeah. Yeah, I told the guy over there. He's laughing too. He's like, because on Friday, here's what happens. On Friday, we get a ton of withdrawals, you know? On Friday, we get a ton of withdrawals and a ton of emails because everyone wants their money. But on weekdays, we don't get a ton of withdrawals, but we still process them, you know, in time. But only on Fridays, people get like, hey, where's my money? But yeah. Yeah, the weekend is coming. Price action versus trend with volume tomorrow or valid. What? Price action versus volume tomorrow. What's the higher win rate for you personally support resistance or breakouts? See, buying from support is valid when we are in an uptrend, and selling from resistance is valid when we are in a downtrend. So higher probability has been selling resistance and buying support. Friday is a non-working day. At Dominion Markets, every day is a working day because we don't rest. We have employees in every time zone right now to take care of business in every time zone. So yeah, we work all the time, making everyone slave away. If I'm working all the time, then everyone's working all the time. You can't keep up, you're fired. Donald Trump style. But anyway, guys, what's this? I have some great takeaways from day one. Looking forward to turning these lessons to profits. Awesome. Maybe after day 2, you could look at a lot of things to turn into profit. Day 2 is going to be pretty good. It's going to be good, better. Is it fair to say after 9 a.m. on gold, due to large volume, we can switch from 30-minute to 15-minute? No, it depends. That's situational. You know, that's completely situational. Can one spend a couple of weeks back testing in different session, be confident trading that session? No, Jennifer, that's not going to work all the time. I know it makes sense in that sense, but you literally have to sit and watch the session move and the candles form. You literally have to sit and watch those things happen. And that's basically gonna help you, I would say it like tons more. From experience, what helped in becoming consistently profitable trader? 1 to 2 trades a day and time. I have a couple of messages to you in Slack. Okay, we'll take a look at that. Incoming FX Summit in Dubai supports you. Let's go. A buy on gold now? No idea. Not even thinking about trading at this point. But anyway, guys, I'm going to head off. I'm going to give some time. So this Zoom is going to take some time to buffer the recording. It's going to take about like 15, 20 minutes. So I'm going to let that buffer. And then tomorrow we're going to see you guys. If some of you guys didn't receive a Slack invite, maybe wait till Sunday to get that invite. Okay. Oh, this was a nice example of impulse entry. Anyway, take care, everyone. Be safe. Have a great weekend. Same Zoom link. I don't know. Great session. Worth getting up at 4:20. All right. Awesome, everyone. Take care. Yeah, message bootcamp@marketfluidity.com. Message that email right there, bootcamp@marketfluidity.com.